It's been a while. Like 3 weeks passed since the last time we had the webcast. Lots of things happened since then, so lots of things to tell you. Got some new inputs for you. Got more boards to show you, and today specifically we will talk about how to trade on the stagnant market, when basically the market is in the period of stagnation. In other words, the market moving sideways like this one. On Bitcoin, you see that's the sideways market, what we see now, and that's actually one of the best times to accumulate cryptocurrencies, or for those that are quite conservative when it comes to the risk. You can still trade on the sideways market to pairs that are trading to USDT, like for example comp to USDT, or let's say ZAC to USDT. Whatever your aim is and your risk appetite, there are lots of opportunities out there right now, because right now it's crystal clear that the market is in the period of accumulation. So that means that this can be a prolonged period. So this can like trade within this area for like maybe a month, or maybe less, maybe even more. It doesn't matter. It's just that we have all the tools at Bitsgap to take advantage of this sideways market, and I will show you exactly how to do this. So this is something that we briefly discussed that in previous webcasts, but since the value of each new webcast is to show you use cases and how to hedge against the falling market and how to take advantage of the sideways market, that's why today I have prepared for you lots of use cases. So we will talk about the spot market automated trading, and we will go through the bots that I have right now active, and we will also talk about the combo bot, and I will show you how I used the combo bot to hedge against the fall that we had from the 37k down to 32k last week. So let me check the chat to see if everything is good. Yeah, perfect. So let's continue. Let's just go straight to the action. By the way, on Binance there is a promo right now for like 3 months or something. Literally, you can trade futures contract that's Bitcoin to BUSD. This one, let me show you. Bitcoin BUSD. That's the contract that you have there. This one, BUSD. So the fees there are now negative, so that means that you get paid actually for being the market maker. So whenever you short sell the market or long the market with limit buy or limit sell order, basically you get paid for what you do, and that's gonna be for like 3 months. That's a great opportunity for you to trade on BTC to BUSD with the combo bot. That's why it's perfect. Not only you will generate returns just due to the algorithm of the combo bot, but you will also earn rebates for each limit buy or sell execution on BTC to BUSD. So that's like I wouldn't say it's a big surprise, but it's kind of a decent reward thanks to Binance. So yeah, so what I got here, you see the market moving sideways. So I have still in place my bots that I launched like 25 days ago. Right then we had the next phase of the market downfall from 45k approximately. So that's the one I show you right now. That's Bitcoin to USDC, and you see that my range, let me actually zoom out the chart, like 4 hours, it's gonna be good. So you see, I looked at the previous price formation and decided that the optimal range for the bot would be to trade from around 45k down to the lowest that I consider to be possible price for Bitcoin to fall, at least for a short period of time, down to 30k. You see, that's exactly what happened, and it actually fell to that point twice, 1, 2, and 3 times already. So this is when the ASBot can bring you the most, because it's like the ASBot is perfectly designed to generate returns, like maximize returns on the sideways market. So that's exactly what I decided to do, and you see it works perfectly well. So far 46% within a matter of just 1 month. You can check the rest that I have. For example, for Quantum BUSD, you see also pretty much it moved in the market range that I defined. You see, like it went a bit lower, but still that was a perfect price range that I set for the Quantum. You see, indeed. So far so good, and that's 27%. So I also have 0x and Litecoin. That's because I prefer these coins. These are my top coins always. That's Quantum, that's Bitcoin, that's Ethereum, but I don't have Ethereum trading to USDT here, but I have Ethereum just in my portfolio. So that's the thing, and notice that I have some other cryptocurrency pairs trading. So that's the 0x to Bitcoin. And in previous webcasts, I mentioned that the highest possible return you can achieve with the automated bots at Bitsgap is by trading the classic bot on multiple cryptocurrencies. So by multiple cryptocurrencies, I mean pairs like 0x trading to Bitcoin, or that can be, for example, 0x trading to BNB. So that means that you are simultaneously exposed to the value change of 2 coins. That's the 0x, the base currency in that case, and the BTC, which is the quote currency in that case. And as you know, the bot has a changing value in its base in open orders and the quote in open orders, because whenever the price falls, it takes your quote currency, that's Bitcoin in my case here, and it buys 0x. Whenever the price rises, then it sells 0x in Bitcoin. So that's why this balance always fluctuates. So you can see at some point that you have more 0x's than Bitcoin, depending on the market volatility. So as you look right now at this price action that we have on 0x to Bitcoin, you can clearly see that the value of 0x relative to Bitcoin depreciates. So that means that most likely people are selling altcoins to Bitcoin in order to accumulate Bitcoin. Basically, they want to have more exposure in Bitcoin because the market sentiment right now is really in favor of Bitcoin due to this news around the El Salvador and all that stuff. So that's why we had this bounce of the 32k up to 37k, and most likely that's not the limit, but still risk should be considered. So that's what I see, and for me that's pretty okay. That's okay for me to see that the value of 0x depreciates to Bitcoin, because in that case I'm just selling my 0x. Actually buying 0x with the Bitcoin as the price depreciates. So that means that I have now more 0x in this bot, which is good, because in the midterm and long-term perspectives, I do believe in 0x, and for me that's pretty okay to see this kind of action. And that's why I launched this bot, because I'm indifferent towards whether I will have more 0x or Bitcoins. I'm just indifferent towards that. But the cool thing about it is that I use both 0x and Bitcoin to generate extra Bitcoin. Like for example, here in Poly trading to Bitcoin, I have so far made 19% to my initial investment in Bitcoins, okay? So this Bitcoin that I made in profit, it is also exposed to the value change relative to USDT, right? So as soon as we see Bitcoin going higher, hopefully reaching, let's say, 100K at some point of time in the future, then the profit that we made on trading like Poly to Bitcoin or 0x to Bitcoin, it will double, like it will triple even. So it's not 57, it's going to be like 157. So that's what is the high yield strategy that you can achieve at Bitsgap. Trading to crypto assets, the value of which is exposed to USDT. This is when you can achieve the most, right? So you generate returns in the crypto and you anticipate that the value of this crypto will appreciate in the future relative to USDT, for example. So that's why you can see your returns tripling, for example. That's the case. But at the same time, this is the most riskiest automated strategy that you can have possibly here, because what can happen is that both the value of 0x to USDT and the value of Bitcoin to USDT can depreciate, which is very bad. In that case, you are exposed to the double risk exposure. That's the thing. But since we are clearly right now in the accumulation phase, and there are lots of tools that you can use to actually see that we are in the accumulation mode. So for example, you can check the data on the Glassnode and you will find that there are lots of long-term holders that are right now accumulating crypto. You can see that there are like 12,000 Bitcoins that were purchased at 32K and around, I don't remember exactly, but yeah, I think it was like 14,000 Bitcoins that were purchased at 37K. So you can see that approximately the average price that the market entered is around 35K, like 34 or something K. So they are now in the profit zone because the price is now trading at 37. So and that's not it only. I mean, there are other things you can check, like for example the volume profile. Let's go to Bitcoin to USDT. So you see right now we are trading above the highest point of interest by the volume profile, which is actually good, because that means that we passed this this level of the maximum turbulence that we had in this area, and since we are trading above it, this is very good. Hopefully we will breach 40K. This will most likely open the round up to 45K back. But I mean, that's not the financial advice, and I'm not trying to tell you that you should rush into the market right now. I'm just telling you what the market shows us right now and how you can interpret this data. Like other complex and sophisticated tools that you can use are like this one, for example. That's the Bitcoin NVT price. You can read about it, how it's actually being calculated. And the thing about this one is that it actually shows you the real price of Bitcoin based on the investment activity on the market, and it shows you the actual price on the market. So according to this chart, for example, the NVT price should be around, it's actually around 55K, but the actual price is around 37K. So that means that we are now trading below the market premium. And you can see the past cases, then this happened. You see, whenever the price fell below the NVT price, it pretty much quickly regained its strength afterwards, so that it trades at this NVT price or above it. Like for example in this case back in 2018, you see below the NVT, then again we still came back to the point where we are trading at the NVT price and or above it or at its price. So the pattern here is that the price comes back to its real network price. So what we see now is a huge gap between the NVT price and the market price, which basically tells us that the fear on the market is real, but the threat itself is not. The network health is very at a great state, and that's because of the activity happening on the market. That's because of the transactions and accumulation phase and all that stuff. Well, it looks like we are clearly in the period of accumulation, and that's why that's the best time to take advantage of the S bot, because it's the ultimate bot we have to generate returns on the sideways market. You see, sideways market. Most likely when I will see the price breaching 40k, hopefully, I will close these bots in order to reopen them, but in the different strategy. That's gonna be classic bot. So the reason for that is because classic bot is a perfect tool. Like it's the ultimate bot for you guys to generate the maximum return on the rising market. Classic bot is the ultimate one, and that's why most likely I will flip to classic bot as soon as I will see that the sideways market is no longer prevails, and that means that if we breach 40k, most likely we will move higher, and that's the opportunity for the classic bot to step in, because classic bot generates more returns on the rising market, and that's because of its algorithm. Classic bot always buys the same amount of coins and always sells the same amount of coins. So whenever 10 coins costs you $100, it will spend $100. Whenever 10 coins now cost you, let's say $150, it will send this $150. So that means that as the price appreciates, it keeps rising. In order for the bot to buy the same amount of coins, it will now need to spend more money, right? So that means that your investment exposure increases as the price appreciates, which is beneficial for the rising market, because the more your exposure is on the rising market, the more returns you make, which is not the case for the S bot, just for you guys to refresh in your mind. The classic bot always spends the same value per each level. So it always, for example, buys on $100 and sells on $100. So it can be that it sells 9 coins and at some point buys 8 coins. So you see the number of coins changes, but the investment value always remains the same. So that's why it's indifferent towards the price appreciation. It will still spend $100. So that's why on the rising market, it makes no sense to trade the S-bot, because it's not the best one to make you the biggest return on the rising market. So for all the bots that I have right now active, I have trailing up enabled, just in case if I let's say I'm away from my laptop, I'm having vacation wherever, and the price breaches 40k. Let's show you Bitcoin. Thanks to the trailing up enabled, the bot will continue trading. So the trading up will enable my bot to move my trading range, which is now here, up to the point where the price is now trading at the higher level. So if it goes, let's say to, no, it's too far, maybe to 42k, then you will see that my trading range will also move with it. But I mean, here it's up to 44k, 44k possible, right? My current range. So in that case, it means that if it goes above the 44k, my trading range will follow the rally and it will now be trading here. So basically, long story short, trading up enables you to follow the market rally, follow the market appreciation endlessly. Okay, so that's why you don't need to stay in front of your computer for like every day. You don't need to check it every day. You have this trailing up that will keep you safe, and whenever the price will go to new all-time highs, the bot will follow the rally for sure. So that's the thing about trailing up. But since I know that the classic bot will generate me more returns on the rising market, whenever I will spot the bullish trend, this is when I will flip to classic bot. But as of now, it looks like it's still gonna trade in the sideways market, so I'm gonna stick with the S bot. So that's the thing with the high yield strategy, which is once again having two coins, crypto assets, which is 0x and Bitcoin, for example. I generate my returns in the crypto asset, that's Bitcoin. So basically trading to these coins, I accumulate more coins in my portfolio, which is good for the midterm and long-term perspectives. If I think that the price of this coin will appreciate, let's say, back to 60k, or even it will make 100k at some point of time in the future. So with these strategies, I accumulate more coins. But I also have those that are trading to USDT or BUSD, which in terms of diversification and risk perspective is a good thing to do, because when you generate returns in dollars, you know that what you made here, which is $76, the value of this will remain tomorrow, the day after tomorrow, and like in a month as well, because we know that stable coins are diversify your portfolio in a traditional way. In diversification in a traditional way is just having multiple coins in your portfolio, crypto assets in that case, which I mean, and these coins should not be correlated to each other. But since in crypto the vast majority of coins, they are highly dependent on Bitcoin. In other words, whenever the price of Bitcoin rises, most other coins, they follow the rally. Whenever the price of Bitcoin falls, they also fall. Like, let's say Bitcoin, you see it's now appreciated. Let's check what has happened with BNB. You see also appreciated. You can actually make a comparison by clicking here and let's say Bitcoin USDT. So you can see how they move in tandem. If they move the same way, that means that coins have the highest correlation, like one of the highest correlations. That's why it's really hard to find in crypto those coins that are not correlated to Bitcoin. And here I have example, that's VU USDT. You see, it's been indifferent towards the Bitcoin market plunge recently. You see, it went higher. So there are a few coins right now in crypto space that actually perform better than the main crypto of the market, which is Bitcoin. But still, that basically proves the rule that in crypto it's hard to diversify by coins, but you can diversify by strategies. That's why it makes sense to have high yield strategies like the one I have here, like 0x to Bitcoin, because that's the double risk exposure here. But also to have bots trading to USDT, which is a conservative strategy where you make returns in dollars. Also, you diversify by just hodling some coins. So for example, in my case, I purchased some Quantum. I feel like I should have Ethereum here. Yeah, Ethereum, some other coins as well that are just in my portfolio, and I do nothing about them. So that's my hodl strategy in that case. Around 40 or 30% of my entire portfolio is in USDT. You shouldn't be all in the market all the time. You should have some cash for the risk perspectives. It makes more sense. So most likely I will add more coins in my portfolio by using this USDT when I will see the bullish trend. Right now I don't see it, and that's why I prefer to stay like around 30% to stay in cash, around 40% trading to BUSD, and the rest in Bitcoins. But that's not it. I mean, thanks to the combo bot, which is the one we have for the futures market, you can now not only generate returns on the rising market by going long, but you can also short sell the market to make returns on the market fall, which is not possible on the S bot and the classic bot. That's only possible on the combo bot, thanks to the futures market nature. So as I switch to the combo bot, futures, and let me actually open my another account where I have my futures bot, just for a second. So with the combo bot, the cool thing about it is that you can trade with leverage. So for example, you have $100, and with $100 you can trade as if you had $1,000, for example. So you will get those returns that you would otherwise make if you had $1,000 invested, but having only $100 in that case. So that's the cool thing about the futures. But at the same time, that's the actually I have to authorize my device. Let me just do this, otherwise I cannot actually open my account to show you. Just let me do this real quick. Yeah, so here we go. That's my combo bot here, performance. Let's go to futures history. So you see I made 23% for the whole time. And as you see, at the 8th of June, I had this trade on Bitcoin to USDT where I invested $456 and the leverage was 10x. So actually I traded 4,560, but not 456, thanks to the leverage. And on this downfall from 37k to 32k, the bot made $180. So the reason for this trade is that I wanted to hedge against the falling market. I didn't want to sell the crypto that I had in my long portfolio. I didn't want to close my bots that I just demonstrated to you. I decided instead that I have some cash on futures account, and it would make sense for me to counter-react to the falling market. In other words, to hedge against the falling market. So that's why I opened short sell bot. And even though it did not fully cover my whole portfolio, right? But I mean, this is when I had to react quickly, and I should have opened larger value, but this was still a good one to basically to trade against the falling market and to make some money on the falling market, to, in other words, to hedge against the risk. So that's the perfect thing about the combo bot, is that you can use it to hedge your long trades. So with my S bot and the classic bot, I take advantage of the algorithm, which basically buys the dip. And even on this dip, on the sideways market formation, it still generates me money because it always can find these opportunities to buy low and sell high. So that's what I did. But I decided that it's not enough. And since I have enough expertise in the market, and I know how to hedge against the market fall, and I know basically when to hedge against the market fall, you can take advantage of the combo bot as a hedging instrument. So whenever you feel the market is gonna fall drastically, you can open the short bot. It's not just on Bitcoin. You can short other coins that are available on futures market. That's, for example, Link to USDT. You can short sell Link. So let's say you have Link in your portfolio, on your spot portfolio, but you don't want to sell it, even though you see that it will most likely fall right now. So what you can do instead, you can go and short Link. In that case, you are basically hedging your spot position that you have in Link, just for this short-term hedge. I mean, of course, it makes no sense to hedge all the time. If you feel like the price will fall drastically, then most likely it makes more sense just to sell your Link on the spot market. But if you feel like the shortfall, the sell-off is gonna be just for like a week, maybe less, and it will quickly regain its strength on the market, like we have on Bitcoin, for example. You see, it fell to 32k and then quickly regained its strength again. So if you feel like this is what could have happened with Link, then you should have taken advantage of the combo bot short, just to hedge against this short-term market fall. So that's how can you trade. But I mean, putting all these complex things aside, let's just go through the combo bot. So the combo bot is the one designed for the futures market, and here you can select the leverage. Basically, the leverage is the tool that you use to either increase your market exposure or to decrease your market exposure, because the larger is your leverage, the more you can afford to risk, but at the same time, the more you need to put as a margin, as a collateral to cover this trade. Because I mean, if you have only $100 and you want to trade $1,000, basically here you cover 10% of the entire position, approximately, if you go in a cross mode. But if you want to trade $100 with a total value of, let's say, $10,000, that's gonna be a way larger risk exposure, and the requirements here are gonna be bigger, and you are having basically fewer opportunities. That means that the liquidation price for this position is going to be too close to your entry price, so most likely you will be liquidated. So make sure you fully understand the nature of futures market, and you know that leverage can be your friend at some point, and at the same time it can be your enemy, because the larger is your leverage, the closer is your liquidation price in that sense, and most likely will be liquidated. Because let's say your entry price was here, but due to the fact that you used an over leveraged position, your liquidation is here, because otherwise the market cannot afford you to trade longer. I mean, you have only that much of the collateral to cover this huge trade, and that's why your liquidation is so close to your entry price. I mean, the more you put margin in this trade, of course it makes the gap bigger, which is good. That means you provide the market with more space to trade. Most likely you will be not liquidated at that point. So always remember that you need to put more margin if you want to make sure that you are not quickly liquidated from the market. And you will need to have more margin as you want to have a bigger leverage. All right. So as a rule of thumb for me, I trade 10x only, and that's okay for me in the cross mode, because in the cross mode, I take my entire balance as a collateral. So in that case, I provide more space for my bots to trade. So right now, I don't actually want to open any positions, but maybe let's check on Bitcoin. I'm not sure I want to open any. I don't feel like it's gonna fall, and I don't know if it's gonna rise further. I don't know. It just right now I don't feel it, and that's why I'd rather stick with my as-bot strategies that I have active. And as of the combo bot, I just don't feel that's the right time for me to enter the market. But for example, if you feel like, for example, here, if you look at link, and if you feel like it will continue this pattern down to this lowest price it previously traded, then it makes sense to open short position on the combo bot to take advantage of this falling market. You can basically, you make money on this downfall, which is good. I mean, have you ever dreamt of having this opportunity to not only make money on the rising market, but also to make money on the falling market? And well, basically here you now have this opportunity with the combo bot. You can trade all markets. The combo bot is the worst bot for this sideways market. So if you feel like the market is gonna move sideways, do not trade the combo bot, because it's not designed for the sideways market. Basically, you will stay in the delta neutral position. You will be in zero almost all the time. So with the combo bot, just trade whenever you're sure it's gonna move either upwards or downwards. That's the thing about the combo bot. Do not trade combo bot on the sideways market. It's not designed for this market. For the sideways market, stick with the as bot. So yeah, I mean, in trading and portfolio management, the key to your success is risk management, always. So make sure that you fully understand what kind of risk management principles you want to follow. Basically, never put all eggs in one basket. It's just too risky. So make sure that you diversify. And the best way to diversify in crypto is to have multiple strategies. For example, one strategy can be to split your investments to different automated bots. Those that will make you money in USDT, for example, or those that will make you money in BNB, for example, or Bitcoin. So this is your way to accumulate more coins. But use your another portion of your portfolio to buy just some crypto, to hodl it. Just you purchase it at some price, and you forget about it for like 5 months, maybe even a year, maybe longer. So that's the purpose of the hodl strategy. It can reward you the most. But this is where your patience and yeah, well, basically it's only patience. Patience is being tested the most. It's really hard for people to wait for that long, like, because we are so impatient, especially in crypto. We look at crypto, the price skyrockets intraday, like makes 60% or something, and we feel like it's gonna be forever. Like, you can make 60% in one day. Be realistic. I mean, diversify. Don't be greedy. Just do not forget about the risk. You can lose everything in crypto if your risk management is shit. So try to focus on different tools that split the risk, and that's what you can actually do at Bitsgap. You have smart trade mode, where you can trade manually and you can set your take profits and and stop loss to make sure that you won't lose more than a certain value. And with the take profit, you make sure that you secure your returns. We actually have 5 like you can set multiple take profits, up to 5 orders in total. So by having that many take profits set at, let's say, 4%, then 8%, like 14%, then maybe another 20%, you can actually split the risk. You can basically secure your future returns. Don't wait for the price to reach 20% up. You can split it. Take some portion when the profit is 4%. Take again some portion when the profit is 8%. Add it up together, they still make up a decent return in long-term perspective. But with this mindset, you split the risk and you have more chances to make money on this market if you are not greedy. So using these tools, you make sure that you secure your returns. Stop loss, don't forget about it. The stop loss minimizes your potential loss. And as I always mention in webcasts, do not risk more than you can afford to lose, and make sure that potentially you expect from the trade to make you more money than the risk that you put. So for example, if your anticipated return based on these take profits is, let's say, $10, but your risk is $20, it makes no sense to risk $20 just to get $10. Literally, your risk here is double bigger. Makes no sense. But when your potential return is by twice or maybe 3 times larger than the risk that you put in this trade, this is when it makes sense to trade. Only when your reward, like the potential reward you can get from the market based on your fundamental and technical analysis research, this is only when it makes sense to trade, when your reward is bigger than the risk that you put. So this is where you have the most control on the market. You can always change this take profit, you can always change the stop loss. With the bots, you can achieve sometimes even bigger returns when just in manual trade mode. And also with automated bots at Bitsgap, they automatically secure your money, because they don't go all in at one price. Automated bots, they split your investment by multiple orders. So that's why it can achieve you the dollar cost averaging when let's say the price is now trading over here, and this is your limit buy orders of the bot. So whenever the price falls, it executes these orders. So you see here, it purchased some coin, here it purchased, again purchased. So if you calculate the value of each investment here to get the average price you entered the market, you will see that the bot gave you the best, like it gives you better entry price compared with the manual trade mode. As it splits your investments, it basically splits your risk at the same time. And then the price falls, it achieves the best dollar cost averaging effect, which is good. We want to, I mean, the aim is to buy as low as possible, right? In order to sell later at the highest price possible, right? And with the bot, it actually proportionately buys the dip, which is good. It basically achieves the best entry price when the market is in the plunge, and the bot buys the dip, and this is when it's really good to stick with the bot, as it really secures your investments in that sense. So for example, maybe I have some real cases here. Let me just open my previous account and I will show you. So this is my spot market account. And let's maybe look at, I don't know, this one, Poly to Bitcoin. No, actually not the best one, maybe 0x. Yeah. Let's check the price range. So if I would buy 0x at that price level here, where I started the bot with my Bitcoins, and I left it as it is, then you would see the value depreciating by 19%. Whereas with the bot, I'm only in minus 10%. So compare minus 19% with minus 10%. Which one is better? So this is where, once again, crystal clear visualization of why automated bots secure your investments. Because thanks to this proportionate distribution of my money, I'm not having minus 19% as I would have otherwise if I would purchase with all my money at one price. I only have minus 10% thanks to this algorithm. So that's why, and even though it also made some money on this market fall, which is another feature of the bot, and that's why it's really important to understand the risk structure and the profit structure of all instruments that we have in the crypto space. So we have bots at Bitsgap, for example, right? We have the smart trade mode where you can set different orders like TVAP, shadow order, stop limits, and all that stuff. But in crypto, we also have other stories like liquidity mining, for example, on Binance, where you can generate basically semi-passive returns just by allocating some coins into the pool, and you get interest on that. That's basically a passive story here. And I mean, the more you integrate into your trading style, the better, because by that you split the risk, and that's the way for you to achieve maximum return on the market. So for example, you can have some stories involved in liquidity mining, you can have some money involved in automated bots trading, you can have some money in the manual trade mode where you basically check the market conditions every single day. You set new take profits, you adjust the stop loss if you feel like the price is now trading at the area where you should have your stop loss adjusted. So different stories, and thanks to the Bitsgap, you have an all-in-one platform where you can have your automated bots, you can have your manual strategies executed, and you can also monitor your HODL portfolio in the portfolio section here. So that's the thing about trading an all-in-one platform, because by doing that you can achieve the best results, because here is where you can play with the diversification. So long story short, for me, diversification is not having multiple coins in your portfolio, but rather having multiple strategies integrated in your trading discipline. So for me, as a rule, that's 50% in automation, around 30% in smart trade, basically that's manual trade, and around 20% in HODL, because I know HODL can bring me the most money in long-term perspective, but this one strategy is the riskiest one because the value of some coins can go to 0. So that means I can lose everything. So that's why I only allocate 20%. Altogether, all combined, they have their different risk and profit stories. So, but altogether, they make up a decent return generation machine if you know how to use these tools. So make sure you learn how to trade automated bots and which one to use depending on the market conditions. So the S bot is for the sideways market. Classic bot is for the rising market. The combo bot is the tool you can use on the futures market where you can trade on the rising market or you can make money on the falling market. And use the smart trade where you can have the ultimate control over your risk and return you can make based on these tools that we have here. So you can have multiple take profits, you can have stop loss here. You can make it even trading stop loss, which means if the price rises, the stop loss will follow it. So at some point you will see that your stop loss is no longer acting as a tool for risk minimization, but rather at some point you will see that your stop loss has become your take profit. So, which is another advantage of having a trading stop loss, but it also has its disadvantage. You can be liquidated from the market at the point then you would never actually exit the market, but since the nature of the trading function is just to follow the market rally, that's why it's indifferent towards your technical analysis or whatsoever. It's just at some point you can be liquidated by the stop loss at the price that you would not consider the favorable price to exit the market. So yeah, lots of tools, and you have everything here at your disposal thanks to the demo mode. Let me just switch to the demo mode. In the demo mode you have virtual money to trade with, and you can experiment with this money. So you see, for example, I have AGI trading to Bitcoin. It so far had like 5,500 transactions for like 21 days only. Shit, that's a lot. I mean, 67% in 1 month. Even though that's my demo trade, that's not real money, but still you can trade here to simulate real trading, to learn about automated bots, to learn about the configurations that suit you the most, to learn about different configurations you can play with in the construction mode here. So we have everything here for you guys to experiment and to find your ultimate configuration to beat this market. Yeah. So you can learn to construct as bot, you can learn to construct the classic bot, you can actually launch simultaneously some bots by using the trick with the stable coins. So for example, you know that you can only start one bot per one trading pair, but since we have some coins trading to different stable coins, that's the trick. So for example, you can launch the bot on Bitcoin to USDT, which is pretty much the same as launching the bot on Bitcoin to USDC. Yeah, so that's the trick. You can simultaneously launch different strategies, but pretty much on the same cryptocurrency pair. And you can check which one will bring you the most. So for example, you can launch on Bitcoin to USDT. Where is that USDT? For example, you can launch the classic bot with only maybe, I don't know, 40 grids and 2.32 grid step, and you can then quickly launch another bot, but this time on USDC, but having different configuration. Let's say also on the classic bot, but this time not 40 grid levels, but maybe 80%. Oh, sorry, 80 grid levels. And you will check which one will bring you the most to compare. And also use the backtest to check the data. Like it takes the past data, it takes the historical performance, and it simulates trading on this concrete date range to see what would be the return if you would have launched the bot back at that time. So let's say you wanted to launch the bot at the 12th of May, but you did not do this. You can still check what would be the performance in the backtest mode. You say it would be around, that's actually strange, it should be show me. Yeah, 30 days, yeah, it would be 14% in that case. 14% of the return. So you can check the backtest on any coin for any range with like the maximum is 1 month past, so you can have your backtest from, let's say, 12th of May until today. So no, actually that was wrong. Maybe, okay, 2nd of June until the 11th of June. So it will show you the result for these 10 days. So I mean, you can check this data on any coin. It will basically give you an idea of what kind of return you can expect from this particular cryptocurrency pair, but also taking in mind that it will move more or less the same way it moved in the period that you have in the backtest. Because, for example, you see this kind of market formation it made during this period. But I mean, if you expect the market to move the same way, like boom, like this, you see the same pattern, well, most likely you can expect to get the same value, like the same result you had here. But it's never the case, right? It can move like this afterwards, you can move like this. So I mean, it's not the best tool to use for like perfect projections, but at least that's the only tool available in, as of today, the best tool to use to at least to make some projections, right? It's better than nothing, and it gives you an idea of how much money you can get from this concrete configuration on this particular cryptocurrency pair. So yeah, that's pretty much it for today. Let me check what kind of questions you might have. Interesting. Let's check the trades. What do you think if we trade with BTC up or BNB up by the combo bot? I mean, of course you can do this. The thing about this particular pairs is that they have their own built-in mechanism of leveraging and deleveraging. So I mean, it's just a bit more complicated than trading just ordinary futures contracts, but I mean, that's an option on futures market as well. You can of course trade BTC up and BTC down. It's just that remember that these are futures of the futures, so that's the thing about this contract. But yeah, you can trade them. Let's check. Can you set take profits to just always automatically cash out 5% in USDT once that pair is up that 5%? So the thing about the take profit on the bots is that that's actually over here. You see the take profit, and let's say I set for AGI, let's check it out. Let's say I want to set it at 80%. So whenever my change reaches 80%, the bot will automatically cancel trading. It will sell all of the base currency and it will stop trading. So this is how it works for bots. The take profit is in the change. So if it reaches 80%, it will stop trading. If it reaches 90% in the overall result here, change, it will stop trading. So that's how it works as of now. Let's see what else we have. What's the purpose of the artificial intelligence of the bot? So the thing about the artificial intelligence that we implemented in our bots is that they are able to detect market anomalies, but not all the time, like by 80% of the accuracy, but still they can predict, not actually predict, but detect these extreme pump and dump scenarios on the market. So whenever the market is about to pump heavily or dump heavily, the bot will stop trading for a while until the market situation stabilizes. So that's the thing about the artificial intelligence that we have. That's our know-how. I mean, I cannot tell you how exactly it works and like what are the tools that we use to early detect this extreme pump and dump scenarios that are about to happen on a particular cryptocurrency pair. But it's there, and our bots with pretty pretty accurate percentage it achieves in detecting this extreme pump and dump scenarios. So in case when the bot detects extreme pump or dump on the market, you will see the pump protection status, something like that, which by the way has never been the case for my trades, but it's been the case for some other users who've been trading those coins that were under the circumstances of extreme pumps or dumps pushing the price. Yeah, I see. I'm so afraid the bot would destroy my account when the market went down extremely. I mean, that's the phrase from the Dow FILAC. So I mean, yeah, well, that's the purpose of this webcast, to teach you on how to use these bots and how to use other tools that we have to secure your positions. So as I said, diversification is the key to success, and proper risk management is what defines your long-term, mid-term success. So yeah, well, we have all the tools, like for the sideways market, that's the AS bot. For the rising market, that's the classic bot. And in any case, all these bots, they make money for you whenever the price rises or moves sideways or even falls. They still can find these opportunities to buy low and sell high, right? So it's just that you need to diversify your money and never put all money in one concrete strategy. Diversify with different strategies and have some money just in cash, just for the security. Never put 100% in crypto. That's what I would recommend. Make sure you use bots, make sure you use manual trade, make sure you just hodl, and make sure you just have some USDT just in case, just in cash. That's the thing. What would be the best way to accumulate? Just not to set a stop loss. Yeah, that's the funny thing. I mean, by the way, if you look at my current trades, I don't feel like I have stop loss for these trades, because I mean, my aim here is to accumulate, and I want to give as much space as possible. So for example, if the value of Bitcoin goes below my trading range, I'm okay with that. Most likely what I will do, I will launch the bot, but with a larger trading range, because in the midterm and long-term perspective, I'm confident that the value of Bitcoin will appreciate. And what we see right now happening on the market is just the phase of market fear, which is inevitable. It happens almost every 2 years, and then the market again regains its strength and goes even higher. So the sentiment has remained bullish in any case. It's just that the fear is real, but the threat is not. Take advantage of this market fear, accumulate when the rest capitulate, and that's why you can use these bots to do this. And since I'm pretty confident that we are in the accumulation phase, because the vast majority of tools, they indicate that we are in the accumulation. I can see the money flow, and it's just the time to be patient and make use of bots that can accumulate money on this sideways market formation. So that's why I don't have the stop loss, because if it falls, I will just set another bot to trade a wider range and to take this advantage of this range. So but it doesn't mean that you should also trade without the stop loss. It's just the way I consider the market. I mean, it's based on your expectation. If you can afford the price to fall, then maybe stop loss is not, you cannot, I mean, you know, you don't need to use the stop loss. But if you are running out of money and you are afraid, then most likely you should use the stop loss in that case. That's the thing. I put that amount of money to afford me to have another phase of accumulation. That's not all my money that I would otherwise put in crypto. It's just a portion of it. It's the portion of it because I'm still consider that it might fall, and if it falls, then I will take advantage of this fall. I will buy this dip, and that's why I have not all my money in crypto right now. That's why I still have some USDTs and some other accounts with USDTs, just to make sure if it falls, then I will buy the dip. So yeah, I mean, in any case, the rule of thumb: diversify with strategies. Don't put all money in one strategy. Just make sure that you have different stories that make you money, and that's the success in crypto. So yeah, that's it for today, and I really appreciate you all coming. I never take your time for granted. Even if there would be only, let's say, 10 people, I would still host this webcast because I really love doing this. I love sharing my expertise, my use cases with you, and that's the only way to beat the market. The more we collectively participate, the more we share, we exchange ideas, and basically speak up. Use the comment section below and use the support system that we have. Just speak up. I mean, tell the things that you want to see at Bitsgap, what you feel like is missing, what you feel like would improve your trading. That's what we want you guys to do, just to hear you out, just to see what other tools you need. And yeah, but I mean, it should be in the justified manner. I mean, if you ask for something, then it should be justified that you need it. And we always we go through this feedback, and that's how we implement new instruments. Like, you see, you now have the combo bot to trade on the futures market, which is something you won't find on other platforms. I mean, we are basically the pioneers here with the combo bot trading on the futures market. In a way, it trades in the combo bot we've designed. That's the pioneers here. So yeah, I mean, we have a very friendly community, and that's why we really move fast enough. That's why we are capable of developing new instruments quick enough, thanks to your feedback, thanks to your participation, and thanks to your loyalty. That's the only way that we can all together combine achieve bigger results. So yeah, I hope this webcast was useful for you. Feel free to watch other webcasts on the YouTube and subscribe to the channel, because we are about to release some interesting videos. And also go to the Bitsgap knowledge base on the website, and go to the blog where you can have access to some valuable articles that I wrote and my colleagues wrote. You can read more about different strategies and some indicators that you can use in crypto. So lots of things. Just yeah, educate yourself, experiment in the demo mode, and once you are confident in your skills, then start trading real money. That's my biggest advice. So yeah, thanks a lot, and on this second I'm gonna halt the streaming.